Hello, welcome to TradingView. I'm here with the Chief Market Analyst of Londinium FX, Alejandro Zambrano. And we're going to look through a few situations here on the markets provided by people who are sitting on the coal face of the markets. But stock market seems to be just in a limit up type mode. I mean, we've got Turkey going to a state of emergency.
Yeah.
Who cares? Doesn't matter about geopolitical stuff. Doesn't matter about anything really.
You mean the market's rallying
Yeah.
and stock markets in general?
Yeah.
Yeah, they're definitely interesting. But you know what happened over the last few hours? Kuroda says that helicopter money is probably not going to happen. Caused a little bit of a shock to the yen. So maybe something is brewing in the market that might limit, say, stock market gains.
But I think that putting in $187 billion of money from wherever they get it from is not far off the helicopter scenario, really. So
that is also true, of course.
They're ready to throw in a lot there. But let's have a look at some of the situations which are doing the rounds at the moment. The first one is on Euro Aussie dollar and possible breakdown here. Yeah,
it's interesting. The Australian dollar, I mean, if you look at this chart, what it looks like what the trader is looking for is a move lower from current levels, really, and for it to go down to 138, really. If I would trade this, instead of going short at current levels, I would actually just look for a break to the lows we saw here in July. Because right now, that could potentially head to the middle of that range. What do you think?
No, I think you're right. I think that this guy, 11021992, he should change his handle.
Yeah.
That sounds like his national insurance number or something like that, or prison number. But I think the thing here is we really don't know at this point whether this is just a great range buying opportunity or not, and probably the easier thing would be to wait and see. I mean, I can see where he's coming from as far as all that projection that he's got there, but the breakdown would be an easier thing to do.
Yeah, definitely. See, the Aussie dollar did gain a lot, as we talked about here 2 weeks ago, and that's due to iron ore prices. But I was reading this report by Westpac, and these people, which obviously locals, they don't see that sustainable, the iron ore prices. So that would be something talking against the Australian dollar. On the other hand, you have the situation with the Brexit and the Eurozone and the ECB meeting today. And obviously the ECB is far away from raising interest rates. If anything, they're going to tweak their program and maybe do more stimulus later this year. So my view is, yeah, this will probably break down due to the situation in the euro. But selling it right now, I wouldn't do that.
In fact, looking at the RSI trace there, you had that low at the end of June, which gave a low there for the RSI, but then you've got a lower low for July, and the RSI has actually made a floor a bit higher, so there is a positive divergence there on that. So I would actually, and it's also a higher low versus April as well.
Yeah.
So you've got a chance that this is actually. I suppose we're in agreement that a wait and see would be better than a...
Yeah, wait and see, definitely.
Okay, let's go on to the next situation here from Milan Trades FXC.
Yes.
Possible short opportunity on pound yen.
Yes. It's obviously been moving up higher here, and we have this ascending triangle. And I don't disagree that you want to be a seller of the pound. You just need to wait for a break of this uptrend. Now, there are many different ways of doing this, and this is obviously one way, but I'm very against trying to pick a high. I'm more for giving it a day or so, maybe trade sideways, and then when it breaks the low, that makes it interesting. Right now, that low, for what I can see here, is 138.42. That's what I would do at least.
Right. So again, you're on a similar wavelength, but not quite at this.
Yeah, there are different strategies, and this type of strategy, looking for the high, using trend lines, using advanced techniques, is very, very popular. But if anything, I learned from FXC, I'm working there for many, many years, is that you don't want to trade against the trend. And in the short term, we are on a bullish trend. So
it's one of those things you're trying to be, I will not say too clever, but trying to impose your will on a market, which is a difficult thing to do.
So the trick is to have that macro view or technical view, and then you have 10 charts look at 10 markets, and then you just wait for the one that agrees with your macro and technical view, and you trade that one only.
Right. So something to learn from there. Okay. Well, let's go on to the next situation here, which I think this is one we can probably agree wholeheartedly with Gideon Afrain with that chart pattern. Wonderful looking chart pattern.
You can talk about this one. I have a better than this.
Oh, right, okay, well, put it on to me. No, just, I mean, that's a support area, cup and handle point, formation, U-shaped formation there since sort of May, June as well. Wonderful reversal. And the charting thing to do is to buy this current dip around current levels. That's where that echoes the April support zone there as well, around 97.60 or so. And a break to the upside. You could wait longer. You could wait for it to break that last peak and then have a go there. But there wouldn't be any fun in that, would there?
Yeah, I have. If we think about it, what is it that this author or this trader really wants to do? He wants to sell the Canadian dollar, right? And there is one setup which I think could be really, really good. So if this plays out, then the dollar CAD, which has been trading sideways for about a month and a half, that's going to break to the upside. The benefit of that is that it's trading sideways on the daily, so you can hopefully have a relatively narrow stop loss, and then you know what happens when we break out of a range. We tend to get multiples of that range. Yeah. So that's what I would go about if I wanted to sell the CAD, which is what this is all about.
That was a rather clever answer that I could ever come up with. So I'm disappointed in myself. But
no.
That's why you're the economist and I'm just the commentator. I think. But no, I mean it's rare that you see, especially on a let's say an intraday chart like this, such a clearly defined. This is like a textbook type of setup there, and we'll see whether it works because that's the other factor. It may not do that.
Definitely. What is quite interesting is this specific pattern is very common among stock traders, right?
Yeah.
That's where you're coming from. But in the Forex world, that's nothing that people look at too much.
Oh, that's interesting. Okay, well, let's see what we've got next. State of emergency in Turkey. All hell breaking loose there for the Turkish lira.
Yes.
This is from Panthea. What should we do with this particular cross?
So we can see here that the dollar Turkish lira obviously breaking out of this consolidation phase, and we have data all from 2009 here, and it appears to me that we've been consolidating for a year. Obviously, after consolidating for a year, if we indeed have a breakout here, it could definitely be something that can continue to rally higher. So to trade it successfully, though, will be advisable to actually, this is a weekly chart, you indeed want to look for a confirmed break to the upside. And then it's obviously good if you also know what's going on in Turkey, like the economy in general, to be able to know if this is actually going to go higher.
But let's just say this is a good-looking pattern, we're heading for a breakout. But you have to remember that this is still a very volatile situation. Somebody could get shot. There could be war. There could be any. I mean, it looks orderly on the chart, but that pattern can be broken at any time, can't it?
I agree. I mean, that's why you need to know more about what's actually going on, and you need to have that longer-term macro view. That's what I tend to do in general. I tend to tell that to all my clients and people following me. A kid can do technical analysis. Everyone can do technical analysis.
That's why I do it for a living, actually. Yeah. There's no point making your life hard, is it, really?
I met people in London chicken shops doing technical analysis on gold at 11 p.m. and this kid should be in bed, actually. I was out with a few friends and we just needed to eat a little bit. We're in East London. So everyone can do technical analysis. But what you want to look at when you have a break, you want to ask yourself, does this break make sense from at least a common perspective point of view? You don't have to be an expert on all the macro, but does this break make sense? If it does, then you can go for it.
Well, I'm going to go for a change of career now, because obviously being a technical analyst is just really lowbrow, but maybe a rocket scientist, a nuclear physicist, something like that, something which is more in line with my abilities. And,
Yeah.
But on that note, Chief Market Analyst at Londinium FX, Alejandro Zambrano, thank you very much for TradingView today.
Thank you so much.
We'll be back after the break.